Welcome back to Alpha Recap, your quick, friendly wrap on everything that moved markets after the close. We're coming to you after a holiday-themed session, and as always, if you have questions, you can reach us at stockalpha.ai.
Happy to be here. Big day of headlines across Asia and Europe, even though U.S. trading had the holiday off. Lots to unpack.
So, what really stands out here is the risk-on move tied to easing geopolitical worries. And then, of course, the regulatory headlines that popped up at the same time.
Right. Let's start with the big market milestone that stole the morning. Japan's benchmark finished the session above 65,000 for the first time. That was in lighter volume, but still a headline.
And oil was a major part of that story. Crude came off and was referenced near about $101 a barrel in some reports, which eased a lot of the cost pressure narrative for exporters.
Exactly. So, geopolitics easing, specifically less worry about disruptions in the Strait of Hormuz, pushed oil down, which helped cyclicals and exporters in Asia and Europe finish up.
European equities closed at their strongest levels since March 2nd. Bonds in the Eurozone also eased. But a big caveat here. It was a holiday-themed session, so moves can be exaggerated.
Yeah, that tracks. Liquidity was light, and that means intraday swings were wider than usual. Traders should expect volume normalization when U.S. markets reopened on Tuesday, May 26th.
Short reaction.
Big milestone.
Let's pivot to the regulatory headline that added a lot of noise. Reports surfaced that the European Union planned to fine Alphabet, Google's parent, a high triple-digit million euro sum.
And that report included numbers that analysts can feed into downside scenarios, which naturally raised volatility around the ad tech and search complex once markets reopened.
The key point here is simple. A large fine would hit margins directly and raise compliance costs, so it's both a one-time profit impact and a potential recurring expense story.
Not great for the sector. This also raises precedent risk across ad tech and search, meaning more regulatory scrutiny could compress growth multiples for related businesses.
Right, and this isn't happening in isolation. We saw a sell-side downgrade of a China-exposed fintech firm from Goldman, citing regulatory concerns. Same thematic pressure across different regions.
Short reaction.
Wow, that's big.
So what should listeners look for here? Expect volatility when U.S. and European markets post official statements. Look for an EU comment and any reaction from Alphabet management, plus analyst sensitivity studies that model the hit.
Moving from regulation to corporate balance sheet moves. There was a lot of capital allocation news that popped up today.
Berkshire Hathaway stood out. The company was noted to be sitting on more than $370 billion in cash, while continuing to invest in Japanese trading houses and in renewables through its energy arm.
I mean, when you step back and look at this, that cash pile gives the firm a ton of optionality. Acquisitions, bolt-ons, or buybacks. But it can also weigh on stock momentum if investors expect faster deployment.
Coupang also repurchased shares over several days at roughly €2.31 to €2.325, a steady buyback under authority from a spring meeting. That kind of program tightens free float and signals board confidence.
And across borders, the Qatar Investment Authority agreed to anchor a capital increase for Public Power Corporation, which is basically a sovereign vote of confidence for that Greek utility.
Those kinds of anchor investments can support demand for raises and shift sentiment. Capital allocation choices were a real theme, from sovereign anchoring to buybacks to massive cash balances.
Short reaction.
Capital allocation matters.
Switching gears to credit, Enbridge sought noteholder approval for a medium-term note exchange with a disclosed acceptance percentage that was material to recovery and consent math. That was highlighted in the filings.
Right. Credit investors were watching the vote because the outcome could change timing and refinancing terms, and therefore affect credit spreads in the pipeline complex, even if operations didn't change.
Analysts will be keyed into the noteholder vote results and the explicit exchange economics. That's the main repricing catalyst there.
On tech and semiconductors, NVIDIA pulled back on the last U.S. trading day before the holiday, down about 1.9% on heavy volume. Price and volume together suggested elevated attention ahead of future earnings cycles.
Volume tells a story. When heavy volume accompanies a pullback, it means more participants were involved. and investors will be watching upcoming guidance and the next earnings window for any shift in momentum.
Healthcare had some positive regulatory and data catalysts. A company called Pierre Fabre got a positive opinion from the Committee for an Oncology Combo in a specific genetic subset of colorectal cancer, a step toward label expansion in Europe.
And Menarini announced 7 presentations at the big oncology meeting, including the Elevate study. Those abstracts and readouts can move smaller biotech names when clinical endpoints or safety data surprise.
Retail showed interesting operational shifts too. Target's India head said the retailer was weighing costs of AI tools and shifting more contracts toward usage-based pricing. That changes expense timing and margin models.
Plus, a product called Dr. Butler's rolled out nationwide at Walmart after online traction. That's a classic e-commerce convert to brick-and-mortar story. Scan data will tell us if distribution translates into sustained sales.
Quick hits in the background. A Mexican water solutions company published sustainability metrics for modelers, a surgical robotics system received European certification, and a sports sponsorship renewal with an energy firm was noted as a marketing signal.
And one market data note, a leveraged short ETF fell about 2.7% to $4.57 on heavy volume in the session before the holiday. Those products amplify moves and hedging costs, so volume and volatility there are worth a glance.
Patterns we pulled together. Number 1. Risk on at the macro level, driven by reduced geopolitical risk and lower oil. Number 2. Regulatory scrutiny creeping across geographies and sectors. Number 3. Active capital allocation headlines. And number 4. Queued earnings and data events that could increase volatility.
So, key things to watch when markets reopened on Tuesday, May 26th. An official EU statement about the reported fine and any comment from Alphabet. Plus, whether U.S. flows confirmed or reversed the holiday momentum in Japan and Europe.
Also, watch oil price action and any developments around the Strait of Hormuz. Sustained weakness would keep the risk-on mood intact, while renewed disruption could flip the script quickly.
And for fixed income and credit people, the Enbridge noteholder vote and the detailed exchange terms were on the watch list, because that will be the primary catalyst for repricing in that credit area.
For tech and discretionary watchers, monitor revisions and guidance tone ahead of upcoming NVIDIA earnings windows and the ASCO abstracts for biotech names tied to those oncology readouts.
Final takeaways. 1. The market moved in a risk-on way because geopolitical headlines softened and oil drifted lower. 2. Regulatory headlines were a counterweight. A potential large EU fine for Alphabet and downgrades in China fintechs showed policy risk is front of mind. 3. Capital allocation news and credit votes continue to shape expectations for returns and refinancing risk.
Analysts note these items are inputs for scenario testing and monitoring. This episode is informational and not investment advice. There were clear catalysts to watch when U.S. markets reopened that could confirm or reverse the holiday-driven moves.
If you want a one-page summary of today's headlines, or if you have specific questions about anything we covered, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening. We'll be back after the next market session to walk through how these stories evolved once volume normalized. Catch you then!